Thank you all. Thanks, Mark. Thanks, Blair. So today, we are going to talk about swing trading and specifically how we can use technical analysis to identify swing trading opportunities. Now, before I start, I just want to have you guys take a look at this chart here. So for those, I've heard that we've got a wide range of people from very beginner to intermediate to advanced. So for those who are technicians who are on the intermediate and advanced side, can you kind of just share with us what you see? This is a chart of the S&P. It's kind of all like spaghetti, huh? Right here.
Daily chart.
It's a daily chart, yes.
And with
What indicators are showing on here?
a lot.
Volume profile.
Volume profile, good. Okay. RSI, yes, great. Stochastic, good.
Moving averages.
No, not moving averages. Yeah, that's a good try. Yeah, Ichimoku cloud. Yes, good.
Volume.
VWAP, no. But-
Volume.
Yeah, there's volume there. And I think there's one more.
The channel.
Channel, yeah. Actually, it's kind of overlaid. It's actually a Bollinger Band. Okay. So you can see this is it's very hard to interpret. So what when I first started in terms of studying technical analysis, 20-something odd years ago, I was obsessed. I wanted to find the best indicator. I wanted to be able to find out what is the indicators that can tell me when to buy and when to sell. And I started adding indicator on indicator on indicator, but basically what all these indicators told me is I didn't know what to do. So what I want to do is, for those who are beginners, don't worry. This is not foreign. This is not foreign language. I want to kind of give you guys, for beginners, a very simplistic way to be able to analyze swing trading opportunities. Now, for those intermediate and advanced, I have something for you as well. So don't worry in terms of, I want to sometimes think that sometimes we overcomplicate things. We want to be able to, put indicator on indicator or really be able to analyze, charts further so that we can really identify, when is the best opportunity or where can we find those opportunities. So I want you guys to keep an open mind and say, hey, listen, sometimes the best things in life is actually simplicity. And I always say is that sometimes the best trade that you make in the markets is actually, what do you think?
No trade.
Oh no, one no trade. Yeah, because you. Sorry.
But that is the best way.
Yeah, what is it?
The easiest one.
Sometimes what? Sometimes the easiest one is what? It's the easiest way. Yeah, the cleanest one. Okay, so I'm going to share that with you today. So again, I've already had some disclaimer, but I want to keep this workshop very entertaining. This is educational. I'm not here to give you any financial advice. And I always like to say, as market technicians, we love studying charts. We're all these nerds who really like to analyze chart after chart. I look at charts, hundreds of charts every single day. But I want to make sure that you guys are entertained, that you actually look at charts is actually a really fun thing. And it's a really great activity. You have a beer in your hand and on a Friday night listening to some music, okay? Sounds good? All right, okay. So for those who don't know me, I started trading basically during 1999 dot-com boom. I was working for a Toronto-based company at that time, working for a publicly traded company at that time. I started with the company when the stock price was $1.50, and within 6 months, it was $15. And I thought, hey, wow, this is probably the easier way to make money and not work for someone. So I delved right in. And lo and behold, I basically started when the whole market was essentially falling. But I think that time period gave me an opportunity to actually learn real skill, because how can you learn real skill when the market is just going in one direction, right? You can look like a genius, but actually, in reality, the best skill that you want to be able to develop and learn is in the worst market. Because if you can keep yourself out of trouble, if you can actually make a little bit of profit or be able to withstand some of these challenges, everything is really, really going to be a lot easier for you. So I started during that time. I basically, delved deep into technical analysis, and I thought, I found the holy grail. Okay, I found the ability to be able to analyze markets. I found the ability to be able to time entries better, and in fact, it worked. And that's why, I've been studying technicals, and I'm still a student of this trade for about 24 years, and I'm keeping on learning, especially as markets evolve. And after about 8 years, I got quite good at it, and I started teaching other people and started training other people. Been able to be on to speak at many, many different conferences, and also we were the education partner for Questrade and CMC Markets, if you're familiar with those platforms here in Canada. All right, so today's agenda, what we're going to talk about is technical analysis, and we're going to talk about swing trading. And what I want to share with you guys today is a very simple technical analysis approach that I use. And I always like this theory, KISS, right? Keep it simple, stupid. I'm also going to share with you what are some of the most common, especially for those who are beginners, what are the most common technical analysis questions that you guys generally have. And for those who are experienced, hey, it might be kind of something that you might want to rethink. Since we have internet here, we will do some chart analysis as well. So I'll show you examples of how I analyze markets. And then any questions that you guys have, we'll leave it to the end. All right, sounds good? All right, okay. All right, so the most common technical analysis question that I always get is, does technical analysis really work? Right? Is it some type of, voodoo scheme, looking at these charts here? If all traders use technical analysis, would it not work? Right? Very, very valid question. Does technical analysis work for all markets? I know some of you guys trade many different asset classes. Does it work for all asset classes? And can I just focus only on the charts? That's what I always get a lot of questions is, I don't want to do all this research, analysis, I'll just look at the charts. And lastly, if markets are random, how can technical analysis work? So for some of you who may be critics of technical analysis, I hope going through this workshop or working through this presentation, it might alleviate some of your thoughts. Okay, so for those who are new to technical analysis, and I think this is great for some of you experiences, the technical analysis definition is a methodology that uses past data, okay? For example, price, to forecast future price movement, okay? We use past historical data to try to forecast, not predict, okay? So technical analysis is not a prediction tool. It's not saying by analyzing these charts, we can know what the future is. Because I always say, we don't know the future, right? If we knew the future, we probably won't be in the present right now. So keep that in mind, okay? Now for swing trading, for some of you, sounds like some of you are swing traders, it's a strategy where an asset is held for 1 or more days to profit from a price change. So essentially, we're trying to swing, right? We're trying to hold overnight, hold for a few days, hold for a trend. So I'm going to share with you how I use technical analysis for swing trading. So I'm going to get you guys to participate here. I always ask myself, when I approach a chart, I ask myself, what is the trend? What is the trend? Up. Wow. Fantastic. You guys know your thing. What's this trend? Down. Wow. This is amazing. Again, I'm not trying to be, What is this trend? Sideways, yes. You've already done a lot better than many traders. Okay? Now, it's kind of funny, I know you asked me, right? But when have we done this before? I want to buy. Yeah, I want to, don't. I want to buy. Or, market is very, very overvalued. I'm shorting it. I'm shorting this market. This market doesn't make sense. So, first question you ask yourself, what is the trend? Okay? Now, how do we find a trend? Do some of you use trend lines? Yes? Okay, good. That's one tool. So, for those who aren't familiar, very, very simple thing. What we do is we draw one line. Oop, you can't see here. You draw one line extending the low and another higher low.
Yeah, it's not showing up on the.
Yeah, that's fine. And we extend it out. Simple. And looking at this chart, this is a chart of the S&P 500, and it has been working for 1, 2, 3, 4, 5 months. Because every time that the price hits the trend line, what do? It bounces. And what do? Buy, right? And then the fourth one, right? The fourth point, when it comes to that line, what do? You buy, right? And so forth and so forth. So, very simple way. In this chart scenario, you should be looking to buy as close to the trend line. That's it. If you have done that, you have done very, very well. Very simple, right? Okay, let me share with you another way. Now, if we determine that it is in an uptrend, what do we look for? We look for higher highs and higher lows. So, if you look from the left to the right, we identified the low, right? Then what we want to identify is the high. High number 1, right? And then when it retraces, that low is higher than the previous low. Then it goes up, and then it retraces a little bit, and then it makes another high. And then it goes down, and then makes another low, and then it makes another high. So, if you can identify, if you look at a chart, look for higher highs, higher lows. We're in an uptrend, so what do? When we're in an uptrend, you buy, right? Again, not brain science here. Okay, in a downward formation. In a downward formation, we look from left to right. And remember you told me that this is the exact same chart that I showed you in the beginning. It's a downtrend, right? To confirm that, we look for lower highs and lower lows. So we identify a high, it went down, reached a low, then it bounced. High, second, and then low, and then high, and then low. So you get my point. So when we are looking to determine any trend, once we identify if the trend is up, down, or down, we're looking to confirm higher highs, higher lows for uptrend, downtrend, lower lows, lower highs. Okay, makes sense so far, right? Good. Okay, and this one. You told me this, there was sideways, right? A few of you just mentioned. There's no higher highs, higher lows, right? The first one is a higher high, but then suddenly it's a lower high. Well, first one's a low, a lower low, and then suddenly a higher low. Okay? So you get my point. Very, very simplistic. Once we are able to identify what that trend is, you are already ahead. once you have identified that it's an uptrend, you look to buy. Once you have identified that it's a downtrend, if you are looking to buy, do not. Wait for an uptrend. Wait for the trend to change. And if it's like this, sure you can, because this is over almost a 6 months period. Just understand that if you're looking for bigger trends, there is no trend. It's short-term uptrend, short-term downtrend. Okay.
What is the timeline for short term?
I will actually, good question. I'll answer that question later in the slide. Okay. So now we have identified let's just say it's an uptrend. Where do we buy?
Up. You say
Yes, up. Yes, uptrend. Where do we buy? Where do we enter in the trade?
On the toolbar.
Good. Okay. So we are looking for scenarios where now it's an uptrend. One of the things that we can look for is where are the buyers showing up on a chart. Okay. Now this is a part where I know it's very simple to look at a chart at a resistance level or support levels, but I want you to think of it from a psychological standpoint. I want you to think about what are the buyers and sellers doing. Okay. So what we have identified here is it is in an uptrend, right? We have a low, higher high. Okay. We've established an uptrend. So now what do we think? It's an uptrend. So what are we looking to do? Buy, yes. Okay, but at what price? Right? At what price? Now, the high, once it retraced, when it retraced, it could not break the 560.96 level, okay, on that support line here. Then it goes up. Okay, there's no confirmation yet. When the price comes back down to that exact level, 5696, buyers step in. So what do? You buy. Yeah. So now, the key aspect of it is you are not anticipating. Okay? In technical analysis, just to refresh you guys' memory, we are not trying to predict here. We are not trying to forecast. We're not trying to get ahead. We are reacting to what we see in the market. Okay? I want you guys to think about that. So how we are reacting to it is there was a previous level where buyers stepped in. Now, we are at that same level. Now, does it mean, okay, let's YOLO, right? Let's throw all our money there? No. What it tells you, okay, if that level does hold, that buyers are supporting that price and sellers are not willing to sell it for it lower, then that is a good opportunity for you to get in. Okay? So I want you to think about it again clearly, is we are reacting according to what the market is telling us. And I know, again, support resistance is very, very simple, but I want you guys to think about that, right? That's the aspect that the chart tells you more information than you can interpret. Okay? Another, one of you guys mentioned, a few of you guys mentioned, is if we identify that it is an uptrend, we're looking to buy on a pullback, right? When the prices come back down. Okay, so we're just using a trend line here. Okay, as I showed you before, 1 point and 2 points, we extend it out. Market is in an uptrend. Where do we buy? We buy when it comes back down. Okay, when the prices retrace. Now, does it mean that, we should only wait for it to hit that trend line? No, not necessarily. But what I am telling you is that that is an area that you can consider buying if you have not already bought in. Okay? So again, very, very simple technical analysis trend lines that we use where can we get in? Okay? Because when it is an uptrend, you're always thinking, where do I buy? Of course, you can buy high and sell higher, but would it not be better is wait for the market to retrace first so you can get in at a lower price, right? But sometimes what people would say to me, well, I missed that opportunity right at this triangle here. It's already gone. Oh. There's other things to occur, right? You can always look at other charts, right? But if you're focusing, I still want to get back into, let's just say the S&P here, buy close to that trend line. And if the trend line breaks, you're out. Yes. Okay, another uptrend, okay, that we look for is, some of you had mentioned about breakouts, right? So that's another way we look for the market to tell us that there are buyers that have not finished buying and they want to keep buying. So the levels that we look for is, where is a level? So you can see those two triangles here. The price went here on the S&P went up to 47.96, okay, that level, resistance level. It tried once, and it tried twice, okay? And one thing that we can look at is, what are the lows telling us? What's the lows telling us? The lows of the chart.
Uptrend.
Yes, uptrend because of what kind of lows? It's higher lows. Higher lows, okay? So again, very simple, okay? Now you may think, okay, it's going to hit that level, probably sellers are going to come in, et cetera, et cetera. But one key aspect that technical analysis will tell you from this chart is that every time that it goes low, dips down, it is higher than the previous low. What does that tell you? People want to get in, right? Because every time it drops lower, drops not as low as the previous low. So that means there is an appetite for people to be able to get in. Okay? Think of that again. If you are looking to buy something, you obviously want to buy at the lowest price. But if the price doesn't come to you and you say, oh, the price is not coming down to me, it's actually going now, right? Then what do? Do you wait until it gets to the most ideal price? No, right? You want to get in. And you want to get in, you want to get in, and then suddenly all these buyers are pushing. Everybody can see that there is appetite for this particular index here, and what happens? Demand overwhelms supply. Right? Okay. Now, I always like to say, we try to be the best trader that we can be. We try to be able to enter into any position and it's a winning position, right? But in reality, unfortunately, I don't have a crystal ball, okay? I wish I did, okay? But so if I don't have a crystal ball, when I am wrong, when technical analysis, when the charts tell me I should be buying here, okay? But if it doesn't work, I got to get out, right? So where do you exit a losing trade? And again, this is very, very important. And for those who are beginners, I will tell you that risk management is the number one thing that you should learn besides technical analysis, okay? And for those who are intermediate and advanced, you know what I'm talking about, okay? Because technical analysis, as I always say, it's not 100%, okay? It's not a 100% accurate or it's not something that you're going to rely exclusively on. Okay. Now that we have identified an uptrend, right? You can see the two triangles here. I extended it out, okay? And let's just say the level where I set here a buy. That's what I would enter. And when it breaks, I sell. Okay, very simple. So I know it's an uptrend, but the trend line has determined or told us that it has now turned into a potential downtrend. Now, we don't know yet, right? When it broke that line there at sell here, we don't know whether that is an actual downtrend yet, because if you look at it, it's retraced, but every time that it retraces, it's making what? A high. What highs? Lower highs. Exactly. So we don't know when it broke at that line that, oh, it has now turned from an uptrend to a downtrend just yet. But sometimes you don't wait till it turns from an uptrend to a downtrend, then you decide to exit your position. You exit your position with some of these trend lines that forewarn you, hey, listen, this trend here, that every time that it has hit this line, buyers have stepped in. But with that big red candle there, buyers were non-existent. Sellers, if you study candlesticks, that's a red candle. That means sellers or the bears are in charge. Okay? How's everyone doing so far? Good? Good. I'll give. Okay, another scenario, okay, when to exit trade from an uptrend to a downtrend is we looked at some support levels earlier, okay, where the price, again, I'll use the S&P as well, at 5503, it has bounced, and then, hey, it went back to that same level, so you buy, right? As I taught you, right? You buy at support. But what is a warning sign, or actually you can say that it is, if you were to look at it from a bigger picture perspective, you look at the highs, what are we making? Lower highs. Yes, right? But we are at a support level. And for those who understand chart patterns, this is what type of a chart pattern? Okay, no. What is a chart pattern that has lower highs and a support level? Descending triangle, yes, yes. Okay, so in this scenario, every time that it bounces, so it bounced, and it already gave you a warning sign that once it could not make a higher high, and then it broke the support level, you got to get out. So one thing that I will say in terms of technical analysis, and again, I know, as I mentioned earlier, you only react to what the charts or what the price is telling you. But what I want you guys to look at is when you look at a chart, there are buyers, there are sellers. Once you identify what the trend is, the buyers and the sellers, who's in control? You look at lower highs, higher lows, that type of thing. And then I want you guys to look who is in charge. If you are looking to buy, you want strength, right? You want it to continue going higher. But once it doesn't and it fails, and I can say to you that technical analysis will give you some warning signs, okay? Warning signals to indicate that, hey, we are about to change. Now it's not confirmed, it's confirmed once the support level has broken. Okay? So the great thing, okay? The third thing is, when do you take profit? And this is a thing that, a lot of my students will say is the profits is you can take it whenever, right? In some sense. But what I want to share with you is where are some of the warning signs that, hey, this trend isn't an uptrend. I don't necessarily want to wait for it to get to a downtrend before I exit. Okay, what are some of the warning signals that the market is telling us? Okay, a very simple level is it is an uptrend, right? You can see higher highs, higher lows, but you can see very clearly on this chart that the S&P has a hard time trying to get above 53.24. Tried how many times? 3 times. So what this chart is telling me is there are lots of people who are selling at that level, or I would say, okay, there will always be sellers, but what I'm telling you is what the market is telling us, buyers are not willing to buy more than that price. Okay? So I want you guys, when you look at charts, when you look at things, you want to look at the buyers. Because there's always sellers, okay? There's always sellers along the way, right? There's always sellers, right? Seller here, there's always sellers. But in order for a price to keep going higher, you need buyers. And I'm not here, I don't want to use this term, but it's a P word, is in order for something to keep going higher and higher is what? You need new buyers in, right? In order for it to push. And the buyers are saying, listen, at that price level, I don't want to pay $1 extra on that. So what does that tell you? If buyers are exhausted, what will happen? Sellers will come in, right? And especially if there are lots of buyers who have bought already, and they're now looking to exit. Okay. Now, does this mean? Obviously, I've shown you in this chart that yes, there were lots of sellers or lots of buyers who are not willing to buy above that price. But what it's just telling you that even though maybe the price could go even higher, it just tells you buyers not willing, or the buyers who are willing, they're not that strong. Okay? And that's why when we use technical analysis, we are looking to see what the buyer and seller behavior is. That will help tell us what the price is going to do next. Okay, another way is if it's an uptrend, as I showed you before, buyers stop buying on any pullbacks, right? Remember I said to you, or you told me, is if it's an uptrend, people buy on pullbacks. As you can see here, buyers do not come in. Now, does that mean that once it breaks that trend line, as I said earlier, that the price is going to go lower? No, that means that there is some warning signs that this uptrend here, which every time buyers have bought on pullback, they're not buying anymore. That's why. If they're not buying anymore, sellers will come and take over. Okay, and then obviously you can see the confirmation, lower high, right? Okay, now I'm going to answer some of these common technical analysis questions, and I want you guys to participate. Okay, so I've shown you some stuff. Okay, some of you who are quite advanced or intermediate, you know what I'm talking about. For the beginners, you kind of have a good idea what technical analysis charts is. So does technical analysis really or always work? Sometimes, okay. Why sometimes?
Because it cannot say, there is no guarantee that you will go that. And you are you are analyzing some previous data, but you don't know the future.
Yes, good. What else, Yuan?
So it's probably because every moment the market is unique.
Okay, every market is unique. Okay, so you think markets are random?
Well, I wouldn't say random, there's repeating patterns, but they're not going to be the same as they've been in the past.
Okay, good. Changing market conditions. Okay, so maybe sometimes certain technical analysis, which I will agree with. Okay, what else?
The trend is your friend until it ends.
Okay. So do you think technical analysis does it work for you?
Until the point it doesn't.
Until it doesn't. Okay. Good. Yes. Go ahead.
Someone's opinions or like a country opinions can change everything.
Okay. Good. Yeah. So other external factors. Good.
I think it works all the time.
It works all the time. Okay.
I agree with him too. But even the fundamentals when they come in, it's all algorithmic, right?
Okay.
Everything is, how the big banks, how they see things. But
Yeah.
it works.
Okay. Good.
Yeah.
Good. Okay. All right.
I think it's 50-50.
50-50.
Every
Okay.
point you have 50-50.
50-50. Yes, of course. True. And gentlemen.
Best way, I never trade swing trading.
Yeah.
So I did like day trade
Okay.
or scalping.
Okay. Do you think technical analysis, like looking at the charts, help you with your day trading?
Yeah, there's like a certain time, like time frames you need to, if you're swing trading. So what is the best time? Would you see the rejections? Like how you get the confirmation if the trend is rejecting from the trend line. So
Yeah.
to get inside the buy, you're buying, right? So
Yeah.
you need to have some kind of confirmations. How you confirm that?
Okay. Good.
Well,
So,
it's working for somebody at all times.
okay.
Because the breakdown of the trend is obviously being driven by someone that's profiting from that breakdown.
Okay. Good. So, thank you for all sharing. So I would say yes, but there are external factors. And again, for some of you who are been obviously trading for a while, me and my whole bunch of students, we were looking at this reversal before Liberation Day. Okay, the charts looked good. Everything was, this big pullback in the market. Everything was firming up, and then suddenly, we were like totally off guard when Trump introduced the tariffs. Didn't matter how the charts looked beautiful. Okay, it was ready. It was firming support. Suddenly, that external news.
But there was
Doesn't
a
work.
discussion for a long time about the tariff.
But yes, good, yeah.
Why the people are reacting in a negative way?
Because people, you've heard about taco trade, right? People didn't believe he would actually do this, and when he actually did, it caught everybody off guard. Okay, so I want to say one thing is, external surprises or news trumps all the charts. Okay, number two, again, chart looks good, everything looks positive, all that stuff, and then suddenly Fed Chairman Powell said something that market didn't like.
He says good afternoon.
Yes, or he said something or didn't say something. Okay, it ruined our setup. Third thing, economic data, especially economic data that are a surprise. Okay? Tomorrow's CPI data, if something is positive or negative according to what the market is expecting, you will see a surprise. Okay, another few. Earnings, right? We are in the midst of earnings season right now. I've seen beautiful charts, okay, prior to earnings, and then suddenly, right? External news, because now you have new information. Okay, this new information is very bearish. And second thing, do you guys believe that the market is manipulated?
Absolutely.
I agree. And I'll tell you a very, very quick story. When I was first starting out in terms of learning the markets, I flew to New York to meet with this fund manager who agreed to meet with me because I wanted to pick his brain to see how institutionals trade. And he was monitoring a small portfolio. I was showing him all these charts and technicals and all that stuff. And I said, hey, what do you think, Mike? What do you think of this chart? And I pulled up this chart and I said, hey, it broke all these trend lines, broke all the support levels. I think it's going to go lower. Oh, well, we have 11 million shares in it. And I said, oh, like I didn't want to say, oh, we should sell, right? Right? I'm just a little like a newbie at that time. And he said, Mike, it'll go back up. And when I flew back home, the price actually fell. I think it went from $11 all the way to like $8 or $7. It fell very sharply. And then I forgot about it. I said, I'm smarter than these fund managers. And then a month later, the price was higher than what we saw at. So there's what I want you guys to think, and that's why technical analysis is not necessarily, it'll show you what the price is doing, but the markets is a zero-sum game, okay? It is a zero-sum game. There are winners and there are losers. There are people who make money and there are people who will lose money. And everyone's trying to fake people out. And what I have seen more and more is that there is a lot of liquidity sweeps. Okay? Certain key support level they wipe out, and especially if some of you are in crypto, it's been pretty tough, right? It's pretty tough. It's like all these crypto just basically have no support at all and just basically wipe everybody out. And do you think that was somehow engineered? I'm not here to have any conspiracy stories, but it tells you it's a game. Okay? And by studying behavior, we can try to be better, okay? Or at least be able to with the well-financed, the well-experienced and knowledgeable, and people who have a lot of capital. Okay? And last thing, did some of you this week trade Beyond Meat? No? Oh, okay. Beyond Meat is an alternative beef burger. Yeah, this past week it went from 68 cents to as high as $7. Okay, 66% was short, and again, it was engineered. And you guys maybe are already familiar with GameStop, right? Yeah. AMC, Bed Bath & Beyond, all these stocks that if you try to apply technical analysis to this or fundamental analysis to this, because all these companies don't really make much revenue. And I think Beyond Meat has never had a profit in its entire public history. Okay? How can you use technical analysis? So that's why, yes, but certain scenarios you need to keep in mind. Okay, next question I ask you is, if all traders use the same technical analysis tools, wouldn't it stop working? What do you think?
Market will change.
Market would change, okay. So do you think that we use all these tools, everybody sees at the same levels?
But the interpretations are different.
Okay, interpretations are different. Okay.
But he's using different time frames.
Different time frames, okay, good. But what if, let's just say, we see the same time frame, okay? We look at certain charts and we see strong levels of support right here. Everybody sees that. Everybody says, okay, I'm going to buy, but
So
go ahead, Andrew.
That's what happened to me the other day. Was perfect setup, and then you see it, and you're like, yeah, perfect trade. Institution comes in, boom, wipes everybody out.
Okay.
So
That's a smart.
So you're talking net of catalyst?
It could be maybe not a catalyst. Okay, let's assume no catalyst. So are you now thinking, sorry, go ahead.
Would you be like referred to like the individual trader, because we are still different. We all have the same tool, probably not going to use it exactly the same way.
Okay, good. Yes, I think someone mentioned, yeah, we look at different time frames, so maybe that level that we see, not everyone is looking at it. But let's assume, okay, I'll make it even more easier, simplify. What if everybody sees that same level, and then Andrew, everybody took you down and then went up, right? So does that mean that technical analysis doesn't work? Does that mean that support levels don't work? Should we just throw out, should we just all leave here and go to a pub right now?
Liquidity sweep.
Yeah, but market
Yes.
needs.
Liquidity.
Yes, liquidity suite, yes, that's it, yeah.
Market needs.
So should we,
That
sorry?
pump is the liquidity. We are the liquidity.
Yes, okay, good.
Came to take us out and.
But you're talking about people having a different
Different,
interpretation.
Yeah, so I'll say that the gentleman is said about liquidity sweep. So yes, we definitely do need to be aware, okay? And I will say that just by looking at charts, just by identifying certain levels, just because we saw the price at the trend line doesn't mean that every time it will work. But what we do as technicians, to reinforce what I said earlier, we use past data to try to forecast future price movement. And if we see a certain area, we try. If it's working, then it gives us confidence that it will continue to work. So one gentleman says is, with technical analysis, we keep using the tools that are working until it doesn't. And I can tell you, during the financial crisis in 07 to 09, I thought I was, I thought I was a technical analysis genius. I could see certain levels. Everything was very clear. The levels just didn't work, mainly because there were so many external factors, right? And especially if you remember, every day would be a certain company that maybe had positive news and then suddenly it went down, or negative news. So there was no trend. There was basically every day. But every day it was up and then down and then up and then down, right? So it was I had to adjust certain tools that I use, especially during that time.
So what is the answer? Just one answer. If all traders use the same tools,
Yes.
what is the answer?
I kind of mentioned that is, yeah. I mean, we keep using it until it doesn't. Okay, if it's working, like that's why I always say to people, like some people would tell me, I am using this strategy here. I'm using this moving average crossover. I have identified, back tested that when the 21-day moving average crosses the 62-day moving average, it works the best for me. Every time that I buy, when it crosses, it works. I can't deny that it's not working, right? So you keep doing it until it doesn't work.
Well, when it doesn't work, is it not just a change in sentiment of the?
Yes. I think a gentleman said earlier, is a change in the market.
Yeah.
What you were applying, these indicators, these strategies, is there a foolproof strategy that works for every market, every asset class, every time frame? No. But if you find something is working for you, you don't want to question yourself. You just keep doing it, trading, right? Until it works. Right now, meme coins are working, right? Okay. Yeah, adapt to the market. Okay, I want to move a little faster. If markets are random, I think Johan said, if markets are random, how can technical analysis work? Johan, what do you think? Sorry, I put you on the spot.
Okay, so I guess the only way I can answer is just kind of refer to how I approach things.
Sure.
I don't know exactly what my setup's going to present, but I know it's probably going to be presenting at some point. So the randomness can be like in the timing, maybe how long it takes in between, but there's something that's going to be similar. When I see that, that's when I see it.
Okay, good. So what he's saying is that, yes, sometimes the markets don't make sense. So, and we are using the technical analysis tools. So what do? Which Mark said earlier.
You keep repeating.
No. You said earlier, yes, you don't trade.
Oh.
If the tools, if the strategy, if the things that have been working for you are not working anymore, because you just don't know it. Everything is kind of either external factors or just price action or algos or AI, whatever reason. Don't trade. Do you have to trade every time, or every day, or right, every period? No, right? So we as technicians, what we look for is something that is forecastable, okay? Something that has worked in the past when we look at historical data, okay?
So which means you're going to collect the data.
We need to collect the data, yes.
And start trading.
Yes, correct. Very, very good. That is technical analysis.
And the markets always return to patterns, and then there's a randomness between patterns.
Yes, so you can say yes. So what I will say is that, and some of you are experienced here, is do you think markets are always random?
Absolutely not.
Absolutely not, because why?
Fear
seen the
and
past.
greed.
Yeah, fear and greed. Yes. And even, let's just say, algos, okay, you just think that, oh, the algos don't care, right? But really, in terms of you look at the bigger picture, the algos make very little impact. Okay? Okay. Now, some gentlemen, or a few of you said, okay, chart patterns, right? Chart patterns is the key. I can forecast the future because I can see this pattern and it's going to work. Okay? A double bottom, right? Hits that one level, hits it again. So what do? Hits at that level, you buy, right? Now, I'll give you a little tip that I use is I look for at least a green, if we look at this as a daily chart, I look for a green candle close to confirm that level. I wouldn't necessarily buy just right at that red candle. Just because it hit that level doesn't mean anything. The next day it can go lower. Okay, you want confirmation. Ascending triangle, which Sanjay was talking about. Every time it goes up, it retraces, but it doesn't retrace as low compared to the previous level. So every time that it goes lower, it doesn't go lower than the previous low, and then suddenly, as I said again, buyers come in and push it up. And bull flags. Very, very strong move up, maybe on some particular news, some particular catalyst, and then it's just consolidating, ready for the next move. So let me ask you, so are chart patterns 100% guaranteed that once you see this, the bull flag, it will go higher? Nothing is 100%, yes, right? But what we technicians do is if we see something forming very, very close to that, what we are doing is we are ready. We're waiting. It's this ascending triangle. Oh, every time it goes lower, it doesn't go as low, so I can see that there's buyers coming in. Okay, I'm going to see where should I get in? Where should I get in? Where should I get in? Boom, I get in. I try. And if it's working, I keep holding my profits. Okay? So, to reiterate, I want you guys to always think, what are the buyers and selling? What are they telling us? What are they telling you for you to make that decision? Okay, and last thing, does technical analysis work for all markets? I know a wide range of people here.
Yes.
Yes, why?
Just goes up.
Fear and greed.
There's people.
There's people, yes. Because it's just the price, right, of people trading in and out. Okay.
And we're not looking for predictability, we're looking for probabilities. So because of these patterns, it is more probable that we will be successful. So if we can limit our losses when it doesn't work, then when it does work, we can make money.
Yes, yes, well said. Instead of me closing my eyes and say, oh, I think I should buy right here at this price here. No. I want to find levels where there are buyers who have demonstrated to us that they have come in at this level, at this time, for this particular asset class, for this particular market environment, et cetera, et cetera, et cetera. Okay?
How about the SMC?
Sorry?
How about the SMC?
SM.
Smart money concept.
Smart.
I mean, like, we know all these patterns are like exist, everyone is using, but the smart money is using something else. So is there any examples that we can see how the smart money is doing?
Yeah. Very, very good question. So you can say we will assume that smart money is very good at timing. Okay? But in reality, smart money is not always smart money. Right? We can say smart money is money that is, how can I say, are people who are very experienced, maybe people who have the power to move the markets, or people who have, a lot of very smart people. Okay, I would like to say that. Okay.
Insider information.
Okay, or we can say insider information.
But there was that case with BMNR that we studied in class, right?
Mm-hmm.
Where they disclosed it after the fact, but that company had bought up
Yeah.
at a higher price.
Yeah. So very, very quick. So Sanjay was saying that there have been scenarios where smart money has bought into a certain private placements of a stock much higher than the current levels. So can you say that they're dumb money? Because they bought higher than what the price is? So the question, the answer I will kind of tell you is you don't necessarily have to always follow the smart money. And I actually did, later on I'll share with you my channel. I did a study I looked at some news articles that this year, only 22% of the active fund managers this year have outperformed the S&P 500 index, which is the main barometer of the US markets. So these are very well-educated, well-financed people. They have underperformed. So would you say they're smart? You wouldn't say are they dumb, right? And again, I don't want to deviate from that, but something to think about, okay? Okay, some of you guys have asked, what's the best technical indicator?
The one that works.
Average? Average, okay. The one that works, okay? Yeah, that's a good answer.
Fear.
What are indicators based on?
Price.
Price. So what are indicators helpful for then if we don't?
Just check the volume.
Okay, and volume, yes, volume, okay, confirmation of, okay, yeah, okay. But why is price the best indicator?
It's a representative of behavior.
Representative behavior. All indicators do, and again, not here to dispute all if you guys use a lot of indicators, but they're just visual representations of price. So that's easier for us to visually see it. Have I used any technical indicators on my slides?
No.
No. I don't use that many. I do use, but I used to have all, the chart that I showed you earlier, that was me before.
So what is if you give us like the 5 main things that you look at the chart and you enter, what does
I have showed you in this presentation.
Is it going to be like order block? Is it going to be like a trend line or support level, resistance?
Well, I can go in depth. I won't for the sake of this. I have to keep the session a little short. But what I just showed you earlier, what's the trend? Uptrend. When do we buy? Where do we exit? Where do we take profit? Okay? As simple as that. It can be as simple. Obviously, it can be. I'm simplifying things a lot, but sometimes one thing that we do get away from, especially when we are very, very deep into analyzing the markets, is we don't sometimes think, oh, it's too simple. But really, I had a very good friend who's a market technician, and he says to me, if the price goes from left to right, and in this angle here, it's going up. If the price is going down this way, it's going down.
So is it 45-degree angle you show or?
No, it's 60.
Okay. Yeah, last thing, a few more is, if the chart is most important, can I just focus on the charts only? Okay? Some of you may know this answer. Yes?
Yes. No.
Not necessarily, right? Because price is one thing, but you want to look at other stuff, right? And what other stuff do I look at? Now, it's obviously depending on what you're trading, depending on all that, but if you can, especially obviously if you are trading stocks, company stocks, you got to look at the company's fundamentals, okay? It will make your job a lot easier. If you buy a company, you see that's in an uptrend. If you buy a company that's growing revenues very fastly, they're very profitable, their business is doing very, very well, would it make your job in terms of technical analysis much easier versus a company maybe like Lululemon, right? Whose sales have been declining, profits, all that stuff, right? Even though you can see it's an uptrend, right? another thing, I do look at intermarket analysis. So when I analyze a specific aspect of a specific market, I want to see how the markets, the other markets are performing. Why? Because I want to see where money is flowing. If we look at the US dollar has a reference point, and I'm saying gold is an uptrend, Bitcoin is an uptrend. Bitcoin and gold are priced in US dollars. I want to see relative strength. Which one is performing better, right? Where is money flowing? Or I look to see other markets, maybe gold has a safe haven asset, or maybe Bitcoin has a risk-on asset, right? So I like to see when markets do fall, where is money flowing into? Are they flowing into the staples? Are they flowing in gold? Are they flowing into the US dollar? It will tell me what I should be doing. And last thing is sentiment, a very, very big part, okay? There are hedge funds who use social media to trade the markets, right? And social media really propelled GameStop, right, to all these record highs. Same thing with Beyond Meat. So we do look at all that stuff. And the gentleman, you had a question, is what chart time frame do I use? Okay, in general, technical analysis works the best when what? When does technical analysis work the best? When does charts work the best? When we have more what? Data. Yes. So if you are a day trader, you have a certain amount of data relative to a daily chart, over a year, over a month, over a year, over 5 years, over 10 years. Right? So it works better when you have more data. And that's why sometimes I would say that the technicals work better for longer time frames. Okay, so even if you are a day trader, use technicals to identify what the trend is, and then within that trend, within that day, identify, okay, it's an uptrend. What am I doing today? I'm looking to what? Buy, right?
So in that case, if you go for a specific one, can you do that? Like go for the Canadian company Crescent Point Energy.
Sorry, say that again.
Crescent Point Energy. Let's say you have the 10 years data.
Yes.
Does it better time frame?
So very good question. So he's asking if I have 10 years data, is that better? Now, will 10 years data, for a day trader, will 10 years data help you? Not necessary. For 10 years data, does it help you as an investor? Longer time frame? Yes. Yeah. So what I'm saying to you is that if you are very, very short term, be aware that the data that you're collecting doesn't tell you, it just tells you in that moment. So you're not able to get the full picture. Okay?
So don't counteract the trend.
Don't counteract the trend. Yes, yes.